Welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's a subdued trade for the markets. The Nifty trades around 10,700. Broader markets outperform the benchmarks. Hindalco is the top loser on the Nifty. MD Satish Pai says the aluminium dumping from China may spoil an otherwise robust year. And Nestle continues to surge to record highs. The management says it is looking to enter the breakfast cereals management in the country. And Tata Steel is also among the top Nifty losers. The management expects the company's debt to remain slightly elevated in the near term.
All right, thanks for tuning in to Countdown, viewers. My name is Nitasha. The next 1.5 hours, we tell you all that's needed to know for day's trade today. We are trading in and around the levels that we've been trading at for the past 4 hours odd, around the lowest point of the day, about 1/3% off. The Nifty Bank, one principal culprit of the session today, down about 0.5% or thereabouts. Yes, about 0.5% lower at 26,052, and that too trading at the lowest point of the day. And the market breadth will come up on the screen before I go to the heat map and show you what's happening to the Nifty 50 movers and shakers. The market breadth for now in favor of the advances. Remember, during the market wrap, we were talking about this possibility coming in because the small cap index did end in the green yesterday, and today we've had positive market breadth. Let's wait and watch if this continues. Bring up the heat map and show what's happening at the benchmark index levels. Some banks will be right down there at the bottom of the screen. We'll probably have some oil and gas names and some commodity names. So Hindalco and Tata Steel down. Axis Bank and HDFC, principal culprits. ITC too, down about 1.5%, and OMCs and Reliance right up there. So that's essentially the clutch of names which is putting pressure on the index. On the flip side, I mean, Coal India is a tiny tune in terms of the weight. It's not too much, but there's strength in Sun Pharma, ONGC, Tata Motors, Titan, and HUL are amongst the other names, which also the consumption flavor, which is doing rather well for itself in the session today. So that's the set of stocks at the large cap end of the market. Quickly, just very quickly tell you what's happening to the top 3 movers and gainers on the mid cap and the small cap end of the spectrum today. So at the mid cap end of the spectrum, Jyoti Labs, and I'm sure Agam will talk about it in a bit, but Jyoti Labs 16% higher post results, extremely strong move. Granules India has done well. Petronet LNG just shows what's happening to the larger gas related stock space. All of them seem to be doing rather well for themselves. 9% up for Petronet LNG. And on the flip side, you've had PTC, which continues to grind lower, 7% down in the session today as well. GSFC has some issues, as does Time Technoplast, which is corrected quite severely, I might add, from 160 odd. The Time Technoplast is now trading at 122, so it's a really steep correction that has come in onto this stock in the session today. But and of course, some small cap movers out there on the screen. Sugar as a pack has done really well for itself. But Agam, what about the more liquid universe?
Well, in terms of derivatives, we are looking at a lot of traction. There has been an increase in open interest for now, but this is likely to see some unwinding. Let's take a look at the Nifty futures right now. So we are looking at an uptick around nearly 3% in open interest, and this is largely towards shorts building in there. There has been a lot of indication with respect to weakness in the markets by a lot of technical experts out there, and this is perhaps a partial culmination of those predictions. Moving in terms of the Nifty Bank too, let's take a look at the open interest. About an increase of around 2.5%. On the whole, much lower than the kind of traction that we've seen over the previous couple of sessions as well, with a decline of as much as 0.4%. Can we take a look at the India Volatility Index and see where that's currently at? Well, no move. It's actually just largely flattish if you consider and disregard the 1% up move there. Still below the mark of 14. So no substantial changes in open interest when it comes to the different strike prices. Again, you know, when it comes to the changes in OI, given the fact that we are hanging around the mark of 10,700, 10,800, that's exactly where you're looking at more traction, and a substantial amount of calls now being written around the same levels, which means that there is resistance building for the benchmark indices, in this case specifically the Nifty, in terms of moving up at least in the near term. Again, in terms of key stocks that I'm watching out for, TVS Motor Company is the first one I want to bring up. I want to talk about granules, but I'll address TVS Motor Company. We are looking at a substantial amount of weakness, and the most increase in open interest in today's GR trade for now. So we are expecting to see some more declines coming in as far as TVS Motor Company is concerned. Granules India is one of the few gainers in the broader markets, and we've seen a little bit of a reversal over the past couple of days for Granules India. As you can see, another 18% added, even as the underlying advances by nearly 9% for now. But other than that, there's weakness all around in a lot of the other F&O counters. So let's bring up Muthoot Finance. That's where we're looking at a decline of nearly 3%, 16% added in open interest. Let's pull up something like a Tata Steel, and a reversal coming in through 15% added in open interest. Again, this is after the earnings, and with steady earnings, with a lot of broking houses also upgrading this particular stock. But it seems that we're looking at a bout of profit taking in this particular counter. And the last one, of course, is Cipla. Cipla is down, not as much as some of its peers, but down 1% in any case, and 12% added in open interest towards fresh shorts, Neeraj.
Okay, some numbers on the screen. Before we get into a market expert, we'll probably take views from him on this as well. But Bajaj Finance numbers are out, and optically it seems to be a really robust performance on the bottom line. 60% jump. We were anticipating 606 crores, the Bloomberg poll. It's come in at 721 crores. This is an exceptional bottom line performance. Let's wait and watch what the NII number is looking like. The expectation, of course, is that there will be a 33% uptick in NII at 2257 crores versus 1689 crores. Let's wait and watch if that happens or no. Asset quality trends would be watch out for as well. The last few quarters, their asset quality GNPA numbers have moved up from 1.5 average to about 1.7 average. Let's see. The gross NPA is about 1.48. I don't think these would disappoint the street at all. It seems to be, all in all, a fairly reasonable set of numbers from Bajaj Finance. The management will be joining us in a few minutes or thereabouts. But all in all, seems to be an okay number. Waiting for the NII number to come out and just see what's happened there. But the net profit number, the asset quality, all of that looks pretty much in place.
Well, I think for now, Neeraj, the markets are not so worried about the bottom line. I reckon that it's the NII number which is going to be crucial, because we really haven't seen too much movement. We did see a little bit of a spike out there, and with the growth of as much as 60%, this is certainly the highest that we've seen on a year-on-year basis across many quarters, as you can see on the screen out there. But again, the most crucial numbers out there, I think in this case, will be your NII growth number, where we're working with a number expectation of around 35%, and of course provided that the asset quality also remains stable and consistent with the kind of earnings that we've seen over the previous few quarters as well. But for now, largely flattish. We did see a marginal spike in Bajaj Finance, but again, I reckon a lot of traders and investors out there will be waiting for more details to emerge from Bajaj Finance.
By and large, seems to be a good quarter. Let's actually get in a market voice. Shailendra Kumar, he's Director and CIO at Narnolia Securities, joins us on the show. By the way, sorry, NII numbers out on the screen as well, 40%. So on cue, the top line numbers look, or the NII numbers look very impressive. Asset quality looks impressive. Bottom line numbers way higher. All in all, a very good quarter. Mr. Kumar, thanks so much for joining in. Good afternoon to you.
Yeah,
financials, by and large, I don't know if you individually have thoughts on Bajaj Finance, the big boy, but financials, by and large, seem to have reported a fairly decent set of numbers. I recollect Edelweiss doing well. I recollect the SFBs doing well. Consumer finance companies haven't faltered too much. Capital First was okay. Bajaj Finance, the big boy, doing extremely well. What are your thoughts here? And if you track Bajaj Finance individually, or if you have thoughts on this one individually, then this one too, what do you make of these numbers?
Sure, like so. All the financials given good results. One trend which is disturbing is like for housing finance company, you have seen some kind of a compression in the margin for housing finance company. Coming to Bajaj Finance, it's a very strong company, excellent 4-5 years of growth backing the company, excellent execution by the management. The kind of advantage of digitization that Bajaj Finance has happened, and the way they have kept the cost pretty controlled all through. So even at current level and the kind of result it has come out with, it's excellent buy even at the current level to our this thing. Like it's a great buy and hold.
The last 5 quarters, I remember, Mr. Kumar, there were some question marks about the pace at which the loan book can grow and whether it can maintain the asset quality. We don't quite know the answer on the loan book, but you would presume that the asset quality at 1.48, they've pulled it back to levels that we used to see in the first couple of quarters of FY17. FY18 was largely a 1.6, 1.7 number on the GNPAs.
Right.
It's come down to 1.48, arguably in line with what the management was guiding.
See, like both in terms of the stock prices take first. So last 1.5 years, Bajaj Finance has not done much. So it has almost traded sideways, right? But there is more to do because of the valuation was very high a year and a half back. There's a lot of optimism about the company. So valuation is got stressed. So kind of a time correction was happening in the price. And if you look at the business per se, the kind of NPA expectation along with the competition getting heated. So Capital First came very aggressively, trying to ride on a wave similar to what Bajaj Finance was doing. But see, the management of Bajaj Finance, even in the past, the kind of execution capability they have shown, and the cost control and the growth getting managed. So this result also makes sure it's a very clear-cut outcome of the management pedigree, I would say. Like so, even in a deteriorating environment, they are producing such kind of a phenomenal result. So it gives you a lot of comfort to hold it for a real long-term investment purpose.
Well, a question on the entire sector then right now, with the way Bajaj Finance is, playing out in terms of performance, that is not the case when it comes to a lot of the other relatively smaller players. You just suggested there were concerns with respect to some housing finance companies. Then what is the best way to play the NBFCs right now? Would it be microfinance in comparison? If not housing finance, then what else can there be?
Okay, so for investment purpose, the capital market entity like Edelweiss could be a good idea to own, because the way the business is growing and management at every level of growth is able to manage the business, keep the cost in control. So the second, third line of the management also is coming out pretty well.
Right.
So those areas. Some of the previous microfinance company who has become bank, so one I can name Equitas Holding, is something we are liking a lot, even at the current levels.
All right. So staying with the financials, but shifting focus to banks then. Naturally, the preference, I'm assuming in this case, that it will be towards the private sector banks. How is it looking and what would the preferences be?
Okay, so private sector bank primarily because the kind of market share gain for all these private sector bank is happening on every quarter-to-quarter basis, like.
Right.
And PSU is consistently losing the the market share. But if I look from long-term structural investment perspective, naturally the IndusInd Bank and the HDFC Bank of the world are still, at a point where if you have a 3-5 year horizon, they give good kind of investment thesis can be on those stocks. PSU largely, our view is basically, the noise around the NPA is almost hitting the climax now.
Right.
So we, what our assumption for banking basket, particularly if I look at the PSU, for NPA purposes, for next 2-3 quarters, we assume some kind of, climax happening for the NPA, and the trajectory thereafter will be much, much better. So like, if the banks had a provisioning, run rate of every quarter about 40,000 crores or the PSU combined, we believe somewhere Q3 onward of this financial year, we will have some kind of a sharp tapering in the provisioning. So PNL will start looking much better by the end of, when we exit the FY19 quarter.
Right.
Interesting. Let's not make it sound like a financial discussion only. What else, Mr. Kumar? The way the markets are poised right now, if you were to put in money to work, what are the pockets that you are putting money to work in?
Right. So let's talk about the market a little bit to give the background. So we are almost like 20.5 plus time price multiple on the FY19 earning. So if you look at the broad aggregate market on a Nifty basis, there is not much of a valuation comfort, I would say. I would prefer market to be oscillating between 10K and 9K, 11K for Nifty for at least another 6-9 months, and that time correction will ensure that the multiple thereafter will appear more attractive for an investment purpose. So that I'm the camp which is believing so there should be a range bound time wise correction in the market. Still, as an investor, there is never a safe time to invest, right? If you are an equity investor, there is no safe time. So vis-a-vis the kind of risk you are taking in the market, particularly in the mid-cap space, because I think a lot of high valuation froth is there. So one has to be very cautious as far as the broader mid-cap and small-cap basket is concerned. Stick to those ideas where the management pedigree you have a comfort with right now. Valuation is not too stressed and the return ratio is improving. Maybe FY19, FY20, you believe that these companies that you are investing into, the ROE, the ROC, the free cash flow will be better than what it is in FY18.
So Equitas is one of them, I presume, and you've already spoken about it briefly, just the name. So why that? And if there is something else aside of Equitas that you like,
fine. So let's start with the Equitas first.
Sure.
Equitas has a lot of levers right now. Fine. So start with the cost side. Right. So they have a 45% right now in the overall borrowing basket, the liability franchise. 45% is deposit. It was zero, say 2 years back, when they were purely a microfinance company. So after becoming a bank, now their deposit is 45%. CASA is significantly in the part of that deposit. FY19 it will be about close to 70%. So overall, the kind of the cost on the fund that the Equitas is using will remain fairly constant. And in a rising interest environment, you want to buy a bank or a particular entity where the cost of fund you don't see going up because of the competition changing, right? On the yield side also, because they were consistently bringing down the microfinance portfolio. So they brought it from 3,600 crore to say around close 2,300 crores last quarter. And large part of the money of the Equitas is into investments, which is yielding just 60 bips more than the cost of funding. If you look at this quarter results, non-microfinance portfolio of Equitas has grown by 50% plus, right? As this growth kicks in continuously, those investments which are right now lying in a like less yielding instruments will be getting converted into higher yielding advances, right? In terms of asset side as well, now the portfolio is about 28% microfinance. They had targeted 30% by 18, making the microfinance getting overall in the bank loan portfolio. They've already achieved 28%. And then you have a used vehicle finance and the macro lab, etc. So both the asset and liability side make sure that the net interest margin for Equitas, which fell from 15 to almost like current level, from now on there is no decline per se as far as the net interest margin goes. And the advances are growing in a manner which will make sure that net interest income starts growing phenomenally well for the next 2 to 3 years. If you look at the cost side, they front-ended most of their operating expenses. Yes. So like almost 410 branches they had to open, they have already opened 390 something plus. So from here on, the cost-income ratio also will start, becoming favorable for
75 odd come down.
So yeah, 50 to 80 it had gone, now it has come down a little bit, and it will fall down to 60, 65, I think, over 3 years time period. Net, what will happen for Equitas? The return on asset will become 2% plus maybe by FY20, and the ROE 16% plus hopefully. So it's a bank where the management has shown what they are saying. They are actually executing well in time. Valuation is not that demanding, and the financials are improving on a continuous basis. That would be a good idea to, for a real long-term buy and hold purpose, I would say.
Right. Mr. Kumar, there are a handful of infra companies out there in the roads sector which have the benefit of getting and bagging the majority of the NHAI projects.
Right.
Is that one of the reasons why you like Ashoka Buildcon?
So see, if I look at Ashoka, say a year back, Ashoka were not getting too many orders. Like they were too choosy in terms of what kind of an order book they want to add. But this calendar year, we have seen them winning on 6,000 crore plus of order book. So like right now, book to bill is about 2.5 or 2.6 right. Already. EBITDA margin, has fallen for last 2 years, but now here management is very confident that EBITDA margin will be 13-14% STD. Valuation is not that high, 15 times FY20 earning. So that's a good case for the valuation and a bit of financial improvement. So ROE will improve in the next 2 years for Ashoka. So the combination of the two makes Ashoka a attractive buy. But the idea is, because broadly the market doesn't look that gung-ho, like that doesn't look that that kind of a rapid rally you cannot expect. So the idea should be in all these good investment names where the theme and the valuation supports you. You have to basically accumulate on a decline. So that would be the strategy, for these stocks as well.
Right. And of course, from the auto space, you like Subros.
Yeah. So why? See, what is happening in auto again? Our thesis is very simple. Something which is trouble, which is opposite to the trouble, you go and buy it. Like so, what is happening to many auto component company? So first was the electric vehicle. So a lot of auto component particular players, you saw the PE coming down, the valuation multiple falling. And now, because of the commodity price inflation, you see many, there's a margin compression for many of the auto component companies. But look at Subros. Because Subros is continuously, making localization of their raw material. So largely it was 40% of their raw materials was export. They're not shifting gradually to localization, which gives them a kind of a cushion in a rising raw material, price inflation environment. So they'll be able to not only restrict the margin fall, but rather we believe it will be, improving the margin going forward. Right. Net, we believe almost like a 50% growth for FY20 in terms of profit growth over the next 2 years for Subros. and the ROE also will shift from 16 to something like 24 plus. So that's again in a tough environment, a good stock for next 2 years. Like,
didn't they do something recently? They added a revenue stream of some sorts, Subros.
no, so like
6 months ago.
So like for radiator business you might be saying or something like, see there is one theme which is adding to this is like, so for every MHSB like trucks and all, you have to come out with a compulsorily AC or a this thing like.
Yeah,
so that's a very new space for these automobile AC manufacturer like Subros.
Right.
And Subros already is tied up with Ashoka Leland and Tata Motors, so that gives another growth area for the company.
Yeah, I remember the management talking to us and saying that could add to about 15% top line in FY19 and maybe more. This is the interaction that he had with us.
FY19 about 200 crores could be, the case.
Yeah, something like that. He had mentioned about 10-15% when spoken to us in December or thereabouts when they came out and did the interaction. Okay, this is wonderful. One last question from my end, at least, Mr. Kumar. Anything that you recommend people to get out of for? Something that has rallied, done its part, and you don't think there'll be a further rally?
Right, so the many stocks in mid-cap space, I think, which is like the valuation has gone so astray. So anything randomly, you just do a screener. Anything 30p more, make sure.
A lot of names.
A lot of names. So like.
So you'll get out of all of them?
So see, I'll see the next filter. Like, so if the ROE is less than 15% and the PE is more than 30%, and you don't see any chance of these two, improving the next 2 years, I think it's not a time to be in those stocks.
Okay.
All right. I'd like to add my final question. Mr. In that case,
I think we have the management of Bajaj Finance, Agam.
All right.
Okay. Sorry. My bad. I thought I heard that we have the management.
Yeah. No worries. We'll wait for Bajaj Finance. Of course, we are very keen to speak to the management. But if I just consider the Nifty 50 companies right now, right, well, there are some who suggest that the Nifty companies have not corrected as much as some of the mid-cap companies. In that case, where do you think that you'd like to at least partially book your profits right now and then wait for better valuations and then move back in?
But see, Nifty less correcting, in a month or 2 months, 3 months time frame, you are saying. Look at 3 years, where the Nifty has gone up and where the mid cap has gone up. So still the differential of the valuation premium of the mid cap is so large, largely higher than the Nifty and the Sensex. So still, idea is to reduce the where the valuations are much higher than.
Okay. Interesting thoughts out there from Narnolia Securities. We usually have him in front of the camera out of the Calcutta office. The first time we have him in the studios, and it's a pleasure to have you, Mr. Kumar. Thank you so much for taking the time out and speaking with us. And viewers, I hope you benefited by some of the ideas and the rationale essentially behind the ideas as well. Each of these ideas that he's presented has some logic as to why is it that people can invest into them. Thank you so much for sharing those with us. We would have loved to talk about Jyoti Labs with him as well, but fear not. We have Agam Vakil, who is putting the spotlight on Jyoti Labs as to why it surged and what is the terminal telling us about it. Agam.
Well, a couple of factors behind the strength. Firstly, it's growth that we've seen in the fourth quarter, 20% top line growth. And secondly, of course, perhaps more importantly, the bonus that they announced, that is the 1:1 bonus. So both these factors culminating to, well, the surge in volumes and of course, the kind of price movement that we've seen in today's day of trade, well, heading towards the mark of 500. Of course, that's where a lot of these price targets are after we saw the earnings come through. But that said, let me just address what's happening today and address how we've seen a surge in volumes. We've seen an increase by as much as, well, 7,000%. And of course, do remember this is a relatively illiquid stock, and I emphasize on the word relative, because while we have seen traction, not as much as we've seen for the other peers. Moving down to its valuations, again, it actually trades in line with the likes of Godrej Consumer, or for that matter Dabur, at around 40-41 times. This of course is your Bloomberg estimates in terms of FY19 valuation. So when it comes to price to earnings, this is based on the best EPS of around 11 times right now. Of course, your projected PE will change should we see Jyoti Labs eventually settle down and end about the mark of 450. It is already edging towards, and there's a very high likelihood that could be the possibility that could lead to a change in your forward price to earnings. The other thing I wanted to address was your analyst ratings. As you can see here, 11 buys, 5 holds, and just 1 sell. We're looking at a price target, an average price target of around 420. So quite clearly, the current market price is naturally trading much above the consensus price of around 420. But we still have a lot of analysts out there which is giving this particular stock a buy rating. And we're going to have to wait and watch this, whether or not this is because of the underlying fundamentals. Of course, we've seen that 20% growth come through on its revenues. And for now, this is something that a lot of the FMCG companies were struggling with, growth, top line growth. That's where we are seeing Jyothy Labs come through. Or of course, the other factor will be whether or not will the bonus plays to a certain extent that sentimental positive when it comes to Jyothy Labs. But for now, this is how things stack. Valuations at around 40 times. We still have a lot of buys, even though the consensus price target is much below the current market price. The highest price target in that consensus is well above 500 rupees per share. And of course, we've seen that surge in volumes. As I was mentioning, we're actually looking at a return potential of a negative 8% from current market levels. So these are some of the factors that I wanted to highlight for Jyothy Labs. The way things stand, well, we're definitely expecting a little more surge to come in over the next few days, perhaps a little bit about a profit taking too. But the surge today is for good reason. That is the growth in top line and of course the bonus announced.
Well, thanks a lot for putting that into perspective, Agam. That's Jyothy Labs for you. Big move in the session today. Well, more managements, and after launching at least 40 products over the past few years, since we are talking consumption, let's talk Nestle. The company is now looking to enter into the breakfast cereal market in India. In a conversation with Menka earlier, the Nestle chairman, Suresh Narayanan, says the company's plans to serve the Indian consumer end-to-end, starting with breakfast in the morning to a little chocolate just before hitting the sack. Listen into a slice of that conversation.
As far as innovation and renovation is concerned, one of the challenges in the Nestle organization that I've articulated even earlier is that the challenge for us is not what to launch but when to launch. So it's really it's a question of really how do we try and optimize the current portfolio, how do we put in new elements on the portfolio, and how do you marry that with the current competencies, both technical, commercial and route to market as far as the organization is concerned. So in that context, the innovation renovation of the 30 to 35 odd products has been secular. So it has been across different product categories, not been focused on any one particular category. That is a dimension that is likely to continue into the future as well, because indeed it is a virtuous circle. Once you find that products tend to work, then you are in a position to come up with new propositions. Now clearly the innovation and renovation game is not about 100% success. So the fact of the matter is that we have put out these products into the market. Evaluations are on to see which of these are going to be the race horses for the future. And in a brutally competitive market where success rates for new products are sometimes even less than 5%, I'm happy to say that more than half of what we have put forward in terms of new products have already started to work and have already started to contribute to the overall growth of the company. Now, coming to the breakfast cereals opportunity, as you know, Nestle SA has got a joint venture with General Mills under the name of Cereal Partners Worldwide that is represented in about 130 countries with 50 plus offerings in terms of different breakfast cereals. Clearly, breakfast is the most important meal of the day. We all know it. Some of us practice it well. Others probably do not give credence to it or do not give the importance that it deserves. Now, clearly, this segment is a segment where there is room for product differentiation, and there is also room in terms of the contributions on nutrition, health, and wellness that Nestle can make, and that is really what we'll be looking at as an entry in the coming period.
Okay, that's the management of Nestle. Now, let's, it's 2:30, just almost 2:30, that time of the show where you should get in our experts on board to try and figure out how are they approaching trade this afternoon. Abhijit Phatak, Director at Definite Solutions, joins us with his thoughts on the charts and the derivative positions, as does Bala, Chief Market Technician at cashthechaos.com, joining us from Singapore. And boy, we want to talk to Jay about his call on crude as well. It's worked beautifully for people who have listened to it. We'll get to that in a bit. First, start off with the markets. Gentlemen, both of you, good afternoon. Abhijit, I want to start off with you. Just looking at how the trade is shaping up or has shaped up today, we are off the lows of the day, but still in the red. If you were to be taking fresh positions on either the Nifty or the Nifty Bank at the current point of time, what's the nature of those positions? How would you approach trade?
Good afternoon, Neeraj. Nifty has a very strong support here, 10,680, 10,700 futures. So any dip should be used to buy, if not futures, at least one can buy a 10,800 call, which might be near 60 or 62. Right now it is 63. With the stop loss below 10,680 on the futures. And this call can go towards 90 or maybe even 100 in maybe next couple of days.
Okay, well, that's Abhijit's view. Jay, how about you? How are you now seeing trade on the benchmark indices?
Yeah, see, the medium-term picture remains unchanged. What we've been saying since March and April, we are looking for record highs for the markets beyond 11,400 on the Nifty, but that's going to happen sometime around July, August. And the extreme short term, the markets are a bit, a bit of a crossroads. We don't know if it's going to pull back a little more or if it's going to start accelerating right from today. So that's the short term picture. And the Bank Nifty is got an important support around 25,400 and resistance at 27,100. These are the broad range for the Bank Nifty within the short to medium term. And since my view is bullish, I think we need to look at buying the markets on.
Jay, just hang on for a moment. We have to hear out what Piyush Goyal has to say.
The public sector banks, which have played a very, very important role in the development of this country, which are jewels in this country, will be able to overcome these legacy issues in a very short period of time, be able to continue to serve the common man through more aggressive banking, maintaining the highest standards of ethics and integrity, and converting the support that the central government is giving to the bankers, some of which we have already discussed, some we'll discuss in the course of the day, and over the next few days we'll ensure that the central government gives every possible support to further strengthen the resolve of these banks to come out of PCA framework as quickly as is possible. Thank you.
As short and sweet as they come, but that's Piyush Goyal, of course, speaking on the banking issues. Nothing that he's addressed during the course of the day, and you've already heard comments about that on the website and on our portal as well, or other than a live feed as well. But Jay, Bala, sorry, I had to cut you short because we had to hear out the finance minister. Okay, I'm told even Bajaj Finance is with us. Do we have them? Okay, then Jay, I'll request you to stay on because we need to address the earnings of Bajaj Finance and then we'll come and address trade. But it's been to my mind, a really good quarter. NII up 40%, profits up 60%, much better than what they did even in quarter 3, which also was ahead of Bloomberg estimates. Let's get in the management. The managing director, Rajeev Jain, joins us right now on the show to talk about those numbers. Rajeev, good having you. Thank you so much for taking the time out and speaking to us at Bloomberg Quint. This is Neeraj here. Good afternoon. And congratulations on a very strong quarter. I suspect that the overall AUM growth, while on a quarter-on-quarter basis would be a shade lower, is still in line with the broad range that you would have set out for yourself.
Yeah, so I mean, that suspicion is correct. So it's been a pretty strong quarter. I think the last 15 months have been quite turbulent given DeMon, GST implementation. I think the economy is seems to be coming back on track. So overall, and consumer discretionary has picked up, which is really what we reflect as a company. So it's, on the back of that, it's been a pretty good quarter, I would say, for us as a company. The overall, if you look at the full year, consolidated PAT is up 46%. Assets are up 40% at 84,000 crore. Standalone quarter, I mean 61% profit growth is after many quarters, you delivered a 50% plus growth number. My sense is last 8-9 quarters. So a heartening thing is that the overall gross NPA, net NPA has come in at a record low. We ended the quarter with gross NPA of 1.48% and net NPA of 38 basis points with a very strong provisioning coverage of 75%. So all in all, very good quarter.
Well, it's also the 13th straight quarter of 30% plus profit growth as well, even though it's 60% number, but I'm just laying down some bases out there. Rajeev, I was going to ask you about your opinion on consumer discretionary and the impact that you're seeing from the ground as well, from an industry perspective, but I'll come to that in a bit. Firstly, the asset quality. For a while in FY18, the street was divided as to whether or not you will be able to bring those numbers back to sub 1.5, because by and large, used to stay around at 1.6, 1.7. Quarter one has started off, or rather, this quarter gone by has started off, has done really well for you, 1.48. You reckon this can continue well into FY19, the first 4 quarters of, or rather, the 4 quarters of FY19?
So, I mean, a good start made is job half done. So I think job is half done to that extent. I think I've always said that we would maintain between a corridor of 1.45% to 1.6% is really what our risk modeling corridor is. And a net NPA of 35 to 50 basis points. Those are the guardrails we have fundamentally established for ourselves. And we remain committed to it. We've seen overall slippages come in at a lowest point exiting March in the last 6 quarters or so. So to that extent, we are very comfortably placed, I would say, at this point in time on how we see the overall gross NPA, net NPA position to be.
Rajeev, good afternoon. You just acknowledged that you're coming on the back of, well, a challenging 15 months. That said, currently and from here on, will the focus be on maintaining your market share, or will it be increasing considering the competition that you now face?
So, we've always maintained that we are building business with a 5-7 year view. Despite the challenges of the last 5-6 quarters, the company continued to expand its widen, did both widening and deepening. In the last 1 year, company has added 350 odd new locations from a geographic footprint standpoint. So that should support growth. In terms of new product introduction, we launched a used car financing business early in the 4th quarter. We now have the widest range that any non-bank finance company offers, and each one of them, they total add up to 23, 24 different lines of businesses. I've always had a view, don't be in a business if it's not a minimum $1 billion in size. So we represent a $24, $25 billion opportunity at the very minimum. And with a continued deepening geographic footprint. The goal is to be in 2,000 cities in India in the next 2 to 3 years' time. We ended at 1332.
Rajeev, a final question from my end. Keeping in mind your expectations of the RBI trajectory from here on, how are you expecting credit costs to develop, say, over the span of the next couple of years?
Look, fundamentally, macros are not very strong. Micro is stronger, is what it seems to me from whatever I'm reading or the incoming data that's coming in. We are a micro-focused company, so we should be a lot less impacted if the macros were to deteriorate. So we are very well positioned to manage any difficult macro. Credit costs come with a lag, so they would not come in for the next 4 or 5 quarters. My sense is if the macro was to deteriorate, it would come in with a lag which will be greater than 4 or 5 quarters. Is really how, given the micro businesses that we are in, consumer discretionary, small businesses, the tailwind is that post GST SME businesses that we are seeing in the last 3-4 months seems to have stabilized. And our balance sheet between these two, out of 84,000 crores, is virtually 66,000 crore. So rural, if the monsoon is normal, which is the third leg, probably represents a upside rather than a downside. And our base is very small there as well. So net, I'm quite optimistic entering the new fiscal.
Wow. Okay, by the way, look at that stock go 4.5% higher on the back of those numbers, so extremely strong response. Rajeev, what about customer acquisition? Last quarter, I believe about 1.8 million, which was a 54% YOY growth. Do the newer businesses that you enter in automatically give you a much higher number coming in almost every single quarter? And how was this quarter like particularly?
We added 1.41 million new customers in Q4. Q3 and Q1 are strongest. If you take last 4 quarters, Q1 we added 1.6 million, Q2 is slower, 1.3 million new customers. This is Q3 is strongest normally at 1.8 million and Q4 was 1.4. Normally Q4 is much slower. If you take last year Q4, we added only 1 million customers. This year we've added 1.41 million customers. So even new customer acquisition is up 40% because of the geographic footprint that I talked earlier. The company ended the year with 26.2 million customers, one of the largest customer franchise. It would rank among the top 3 or 4 customer franchise in the private sector space. So, and 60% of the loans that we do in a quarter across all our products essentially come from existing customers, which creates a virtuous cycle of lower risk, because existing customer is 1/3, 1/4 the risk of a new customer.
Sure, of course.
So, that's where we are. That's what we're up to.
Okay, last couple of questions, Rajeev. Last quarter as well, OPEX was slightly higher than what the street was budgeting for.
Yes.
Should the street anyways budget for a higher OPEX because you are on this expansion spree?
Answer is no. Answer is that we are committed to maintain around a 41% OPEX to NIM. Given that we had raised capital, given that we were having a good year, we accelerated investments in geographic distribution, talent, technology. So I think it's a function of we don't look at it as an expense, we look at it as an investment. Part of this is expense and part of this is investment. Answer is, street should look at it as a 41% OPEX to NIM number, committed to bring it down. If you look at it 4 years, if you see, FY14 we were at 46%, came down to 45, came down to 43, ended the year at 41.4, we've inched up to 41.8 on a full year basis. We would like to get to 41. But if the year is strong into the first half, we may accelerate investments for the next fiscal, because we're investing to grow our businesses for the long term.
Okay. My last question, Rajeev, just a color on a couple of other businesses. The SME segment growth, I believe, slightly lower the last quarter. How has that shaped up this time? And the mortgage business, you still on track to comfortably reach that 600-700 billion mark? So,
I mean, if I'm not mistaken, I think Q3 growth was 17%. We came in at 19 for SME lending. I mean, but I must just check my number.
16% in Q3 and 18% in Q2. How is Q4?
19%. Yeah, and we have come in at 19%, which is the point I was making on GST, that things are stabilizing. You should see SME lending get back to growth. We are much more comfortable from a credit standpoint sitting here on SME than we were 9 months ago.
Okay.
Or even, since last 2-3 months, it's probably been the first time that we are a little more confident and comfortable with the SME businesses from a risk profile standpoint. We get the risk in control, or when I say control, we become comfortable with risk. We want to grow the business. It's a huge opportunity.
Okay, great. Rajeev, we'll leave it at that. Congratulations on a solid quarter, and thanks so much for taking the time out and speaking to us at Bloomberg Quint.
Thank you. Thank you. Thank you.
That's, well, the man with the Midas touch, honestly. Bajaj Finance is on a roll. Demonetization, I remember the stock fell down to about 700 or maybe 650 or thereabouts. From there, this large boy is up almost 3x. That's a substantial move in today's session as well. 2031, this would mean new highs for Bajaj Finance. Jay, I know we haven't taken your index call as well as yet, but I have to first take a trade call and take a view on Bajaj Finance before we move forward to the index call. Firstly, a trading idea on Bajaj Finance. Would you trade it? It's already 6% higher now.
Oh, definitely. You know, if you recall from our February call, when the stock was about 1520, bottomed at about 1511, I said it's going to 2200, and this is breaking out of the fresh 52-week highs at 1985. So always it's a good sign when a market's when a particular stock or a security breaks out of its 52-week high. It's going much higher, 2200. Expect brokerage houses to come back tomorrow and raise the stock to a buy or upgrade it to whatever their ratings is. The broking houses are going to be a bit late. If you hadn't caught it in February, you are quite late, and you're coming pretty late in the move, but still not bad for a trader to make another 10 to 12% from here.
Okay.
All right. Well, we also have Nitasha Shankar, Senior Vice President and Head of Research at Securities, now joining us on the show. Nitasha, once again, before I take your view on the indices, we just had Bajaj Finance earnings come through. What do you make of them, and how are you viewing the stock now?
So the post the demonetization, when the stock had corrected significantly, we were strongly of the opinion that this was a knee-jerk reaction, and were positive on it, and we had recommended to our clients to be accumulating the stock, and today I think they can definitely go back home feeling quite happy about it, hopefully. But the stock has performed quite well. The recent plans, as was just discussed on your channel, sounded quite heartening. Of course, we have to rework our targets, so I cannot really share any target price with you, but overall we have remained positive on the stock from a long-term perspective.
All right, so there you have it. We just put up a graph where Bajaj Finance is at highs, and it has moved up quite substantially after we had the announcement of demonetization back in November of 2016. That said, we're just going to continue to keep an eye on Bajaj Finance. Right now, it is going from strength to strength. That said, let's go back and address the markets and take our experts' opinions on what they think or where they think the indices are going to go. So, Jeb, I'm going to come back to you. I want your view on the index now. Where do you think it's going, and what are the crucial levels that you're watching out for?
Perfect. You know, I don't think the Nifty is likely to fall below 10,600, but you know, the medium-term picture remains unchanged even if it were to violate those levels. So basically, the base is very strong at about 10,600 and change. And you know, from a 2 to 3 months time perspective, I'm expecting the January highs to be taken out, and the markets are likely to cross 11,400. And at the upside, I'll leave it a bit open, and we want to follow the trend beyond that.
What about specific stocks, though? Abhijit, let me come to you first. Your stock-specific recommendations for the day? Abhijit?
Sorry, I didn't hear you.
No, Abhijit, I was asking you, give us your index view. Now, what about specific stocks? Can you give us your stock-specific recommendations?
Yeah, there are quite a few stocks which are at support. Reliance is one of them. State Bank is one of them. Tata Motors seems to be starting a pullback of sorts. So I would go with State Bank, which has been in a range of 240 on the lower side and 250, 255 on the higher side. So any dip near 240, 242 futures can be used to buy with a stop loss below 238 for a target of 250 or 255 in the next few days.
Okay, Nitasha, coming back to you, want your view on well, the markets in general, considering, you know, and keeping it into perspective what we've seen over the previous few days. How are you reading these variables right now, and how are you viewing the markets should behave, say, over the span of the next few months? Okay, I think we've lost Nitasha. We will get back to her. But for now, well, the indices, of course, are trading marginally lower. And, well, there you have it. It's currently trading at 10,717.
Can we take Jay Bala's stock calls as well while we just wait for Nitasha to patch up? Jay, you've given us your index view. What about specific stocks?
Yeah, I'm bullish on the graphite stocks, and we saw HEG do a very good performance yesterday. I think HEG is crossing 4,200 and change in the short to medium term. But the best bet at this point of time, from a risk-reward perspective, is probably Graphite India. I think from current levels, it's heading for somewhere close to 950 to 1,000, and you can place a stop below 720. And expect this move to happen from a 4 to 12 weeks time frame. And the second pick I have is on Petronet LNG, and it has completed the correction for the move from 80 to the 52-week high, and from today's low it's of 202, it's bouncing in a very significant fashion. That's a very key reversal with a big volume. So I expect the stock to cross 305 from a 3 to 4 months time frame. So one can place a stop below 200 and expect this price objective to be achieved.
Hold your thought there, Jay. We'll just address the chart of the day now. Moving on to that, we have, the two-wheeler maker TVS Motor Company, which has witnessed a significant dip in trade after reporting a weak set of numbers for the March quarter. How are the analysts viewing the stock? Let's head across to Yash Upadhyay, who is standing by to give us an interesting analysis in this chart. Yash, over to you.
Thanks for that, Agam. Shares of TVS Motors have fallen over 5% since yesterday after announcing a disappointing set of numbers. A big miss came on the margins front, where the company reported an EBITDA margin of 7% versus analyst expectations of 8.6%. The higher raw material prices, increased wage expenses, and higher marketing and ad spends are the reasons behind the fall in the EBITDA margin. Now, historically, as we've seen, TVS commands some of the lowest margins in the industry, and in fact it is the only two-wheeler manufacturer to have single-digit margins. But an interesting trend that the chart has thrown up is that on this front, the company has missed analyst estimates on 4 out of the last 5 quarters. Now, in their fourth quarter con call, the company has maintained its guidance of achieving double-digit EBITDA margin levels, but they have not given a time frame for it. Now, brokerage house Prabhudas Leeladhar believes that this is an uphill task for the company, mainly because they believe that the uptick in the commodity cycle would have a bearing on their EBITDA margins, along with the implementation of the BS6 norms. They would restrict their ability to pass on the higher costs. Also, we have Motilal Oswal. They too have cut their EPS target for FY19 by 12%, factoring in the higher raw material prices. All of this has led to analysts turning cautious on this counter, and 22 out of the 42 analysts tracking the stock on Bloomberg have a sell rating on it. So that is a number in excess of 50%. Back to you.
Okay, some challenges emerging for TVS Motor Company. Thanks, Yash, for bringing us those details. But moving on, I believe we do have Nitasha Shankar joining us back. Nitasha, my earlier question to you was, what are the factors now that will influence the course of the markets over the span of the next couple of months? How are you viewing trade now?
So we do think that the broader indices would remain range bound given the macro headwinds that we've been seeing in the recent past in the form of rising crude prices, which is a big risk as far as inflation is concerned. We also have the rest of the political scenario, especially with the run up to the election. So therefore the higher levels could be used for booking profits. But having said that, individual stock level performance and individual sector level performance should continue. Within the sectors, we think that sectors like IT, consumption-related sectors, as well as the rural and agri sectors would continue to see benefits in rural and agri in particular, with the expectations of normal monsoons, as well as the fact that in the run-up to the elections, we could expect some kind of benefits coming on to the farmers and the rural India. IT too has seen would see the benefit of improving deal pipelines, as well as the depreciating rupee. So those things would continue to affect and influence the IT stocks. So they could continue to outperform, but broader indices as such, we think that they would remain range bound right now.
Right, Nitasha, you spoke about the agricultural facing stocks. One of them, of course, is PI Industries. What's your view here, and why is it that you like this one right now?
So we are very positive on PI Industries. The company has a very unique business model, which is not just domestic faced as well, but as well as export focused as well. So they have a CRAMS division, which is essentially export focused. Especially in FY18, they did see a lot of issues related to the global agri environment, because of which some of the deliveries got delayed. But with an expectation of normal monsoons, as well as continuous launch on commercialization of molecules, both on the domestic side as well as on the CRAMS side, and trying to strengthen their R&D division, we do think that the company is poised to see better growth in coming times. And even if you look at the worst time performance, even during the tough times, the company has managed to deliver an excellent performance. And in addition to this, they should continue to see the benefit of margin expansion too, due to a better product mix. So we do think that we could see another 20 to 22% upside in the stock over the next 1.5 years.
Interesting. What's moved today amongst other stocks? And yes, I know Bajaj Finance has moved today, but what's moved today amongst other stocks is HUL, which has continued to rise and shine. Titan has had a bit of a move from the levels that it was trading at yesterday, so there's some upticks that have come into Titan as well. But ahead of the numbers, courtesy Bajaj Finance move, Bajaj Finserv too has had about a 4.5%, 5% up move there. So good move there. I take on board Nitasha's point that she doesn't want to give targets on Bajaj Finance or Finserv, so I'll leave that out. We asked Jay Bala about Bajaj Finance. Let me ask Abhijit Phatak about Bajaj Finserv and whether he would trade this one. 5577 Abhijit, is there a trade here in Bajaj Finserv ahead of its numbers?
Bajaj Finserv, yeah, as long as it is holding 5500, it can be bought for higher targets of maybe even 5600 or 5650. But 5500 on the futures is crucial on that. That can be a stop loss.
Okay. By the way, just to rub home the point that that's not all, look at the broader end of the spectrum. The Nifty 500, Reliance Communications is now 46 or 47%. Reliance Naval 2 is up about 13%. And Jyoti Labs, which Agam was referring to some time back, is up 19.35%. It's at 468. And a 19% move. I don't remember the last time I saw a 19% move on Jyoti Labs, Agam. Maybe you do.
I don't remember.
You don't remember either. But 19% up move there. Nitasha, did you guys look at the numbers of Jyoti Labs? I mean, what is it? The numbers, the bonus announcement, what is it that could get a stock so excited? 19% higher.
So I think it could be a combination of all. That's not a stock that we have under coverage, so it will be difficult to comment on it.
Okay, Nitasha, if I may just have a follow-up on the FMCG sector in general. We've had earnings for most of these staples come through. Which one is the best? What stands out for you in this pack?
I think we were positively surprised by both Marico as well as ITC. Marico, we do think that the commentary seems to indicate that the worst is now behind us, and we could just see an improvement going forward in terms of volumes. Copra prices too have sort of stabilized, which would help in margin improvement. ITC too, we've seen a gradual pickup in the cigarette volumes, so we do think that that is only going to improve going forward. Their consumption portfolio too has been much better as compared to what we had expected. We do think that that stock could deliver another 20 to 22% going forward over the next 1.5 years.
Okay, Nitasha, we'll leave it at that. Thanks for joining us and giving us your view on the markets and some of those sectors as well. But with that, it's time for a short break from here on Countdown. On the other side, we do talk about the Fab 4 stocks of the day as well and get you a dealing room check at 3:15. So don't go anywhere and stay tuned in the Bloomberg Quick.